Advanced Taxation, Chapter 4, Tax Audits and Investigation. Contents: 1. Purpose. 2. Introduction. 3. Tax Audit. 4. The Tax Audit Branch. 5. Types of Tax Audit. 6. The Tax Audit Process. 7. Types of Audit Exercise. 8. Audit Program. 9. Tax Investigations. 10. Stages of Tax Investigation. 11. Investigation/Intelligence Division. 12. Civil Investigations Unit. 13. Criminal Investigation Unit. 14. Intelligence Unit. 15. Assessment of Investigation/Intelligence Division. 16. Chapter Review. 17. Worked Examples. Tax Audit and Investigation. Purpose. After studying this chapter, readers should be able to know: A. The objectives of tax audit. B. How to conduct a tax audit. C. The basis of the power of the Revenue Service to audit. D. The reasons for tax investigation. And E. How to conduct a tax investigation. Introduction. An audit. An audit is an examination, usually by an independent person, of a set of the accounting books, records, documents, etc., from which a set of financial statements has been prepared. Objectives of statutory audit. The objectives of an audit are to express an opinion as to whether: A. Proper books have been kept. B. The financial statements are in agreement with the books. C. The requirements of the applicable legislations, for example, CAMA 1990 as amended, have been complied with. D. Applicable accounting standards, both local and international, have been adhered to. E. The financial statements give a true and fair view of the state of the financial affairs of the enterprise as at its balance sheet date. And F. The financial statements give a true and fair view of the results of the operations of the enterprise for the period under audit. Specialized audit. Specialized audits are normally involved whenever special attention is needed on a special issue that are not part of the objectives of statutory audit. When a specialized audit is carried out, the auditor would cover in his report the particular objectives that were to be achieved as set out in the auditor's terms of reference. Tax audit. Tax audits are similar to special audits. They are additional to statutory audit and are carried out by tax officials from relevant tax authorities. The approach and scope of work would be slightly different from that to be carried out for audits under CAMA 1990. Power of the Revenue Service to audit. Prior to the introduction of self-assessment scheme, there was no specific provision in SITA for tax audit. Subsection 4 of Section 43 was introduced to empower the relevant tax authority to carry out tax audit. The subsection states, nothing in the foregoing provisions of this section or in any other provisions of the Act shall be construed as precluding the Revenue Service from verifying by tax audit any matter relating to entries in any books, documents, accounts, or returns, as the Revenue Service may from time to time specify in any guideline. An integral part of the self-assessment scheme is the need to periodically verify the tax returns filed by taxpayers through a tax audit process. The tax audit exercise essentially is meant to enable the tax authority to further satisfy itself that audited financial statements and related tax computations submitted by the taxpayer agree with the underlying records. This periodic check is carried out by the Tax Audit branch. Objectives of tax audit. The objectives are to enable the tax auditor determine whether or not A. Adequate accounting books and records exist for the purpose of determining the taxable profit or loss of the taxpayer and consequently the tax payable. B. The tax computation submitted to the tax authority by the taxpayer agree with the underlying records. And C. All applicable tax legislations have been complied with. Other objectives of tax audit are 1. Provision of an avenue to educate taxpayers on various provisions of the tax law. 2. Discourage tax evasion. 3. Detect and correct accounting and or arithmetical error in tax returns. 4. Provide feedback to the management on various provisions of the law and recommend possible changes. 5. Identify cases involving tax fraud and recommend them for investigation. 6. Forestall taxable persons' failure to render tax returns. 7. Forestall taxable persons rendering incomplete or inaccurate returns. And 8. To encourage voluntary compliance, which is one of the strong reasons in support of the self-assessment scheme. Tax audit is usually conducted by a group of experienced support staff of the Revenue Authority. Subtopic: the Tax Audit branch. In the past, that is, before the current reform exercise at the FIRS, the Tax Audit branch was under the Directorate of Assessment, Intelligence, Tax Audit, and Special Investigation, and reports to the management through the Director. However, with the reform, each of the Integrated Tax Offices, ITOs, is expected to have its own resident tax audit unit. Types of tax audit. The two types of tax audit are A. Desk audit and B. Field audit. Desk audit. As soon as a tax return is received in the tax office, such would be subjected to examination by the inspector. This examination is carried out in the tax office. It is carried out on routine basis, indicating that most, if not all, returns submitted to the tax office are subject to this audit. The focus of the desk audit would be to ensure completeness of the items submitted for tax purposes. The inspector carrying out a desk audit will also look for apparent errors or mistakes in the tax computations and or in the accompanying documents and records. The outcome of a desk audit may lead to the conduct of a field audit whenever additional information or documentary evidence is required to satisfy the inspector of taxes carrying out the desk audit. Field audit. A field audit is more elaborate and comprehensive than a desk audit. It is usually carried out outside the tax office in the taxpayer's business premises. The need to carry it out in the taxpayer's premises is to enable the tax auditors carry out the examination of applicable documents and also obtain appropriate information directly from the officials of the business. Subtopic: the tax audit process. Pre-assessment stage. The tax audit branch carries out audit exercise only on companies that have been referred to it by the management. The ultimate authority for referrals of cases for audit lies with the chairman through the Director of Assessment. The usual channel for recommending cases for audit include the management. The management is made up of the technical committee, the chairman, and the directors could refer cases directly to the branch. B. Zonal coordinator. The zonal coordinator may also recommend cases for tax audit through the Director of Assessment. C. Area tax controllers. Desk officers through their area tax controllers, that is ATC, recommend cases for tax audit. The ATC would then pass such recommendations to the Director of Assessment. D. Tax audit inspectors. Sometimes, in the course of the audit of a company, it might become imperative to conduct composite audit, that is, widening the tax audit exercise of a company to cover others within the same group or those with substantial transactions with the company undergoing audit. In such instances, the tax auditor may recommend that ongoing audit be extended to cover related companies. Subtopic assessment stage. The stages in the audit process are as follows. A. Selection of taxpayer to be audited. B. Preliminary review of taxpayer's file. C. Notification of taxpayer. D. Pre-audit meeting followed immediately by field audit. E. Post-audit meeting. F. Interim audit report. G. Post-audit review by regional or headquarters audit. H. Reconciliation meetings. And I. Final audit report. Subtopic selection of taxpayer to be audited. The guidelines and criteria for the selection of files for audit are to be determined by the audit headquarters. The selection of cases for audit is a management function. The criteria, which would vary from one type of business to the other, include but are not limited to the following. A. Self-assessment taxpayers. At least 2 years since the last audit of the taxpayer. B. Taxpayers with refund claims, especially arising from excess withholding tax credits and or other named reasons. C. Taxpayers with nil returns or continuous loss situation. D. Taxpayers with very low adequacy ratios. E. Based on routine industry checks or sectoral audits, that is project audit. F. Based on lead information received from intelligence or other FIRS department or external sources. G. Transfer pricing arrangements. H. Tax planning schemes. I. Claims under double taxation agreement, that is DTA. J. Secondary files. Relationship with another taxpayer by way of holding, subsidiary, associated, or related companies could be criteria for selecting companies for audits. K. Industrial groups compliance evaluation and profitability comparison. L. Verification of poor or extraordinary performance. M. Referrals resulting from desk examinations. N. Information resulting from examination, audits, and investigation of other taxpayers. O. Random sampling. P. Firms making unusual requests or taking extraordinary decisions, such as centralizing an erstwhile decentralized operation. Q. Information from intelligence units of the tax audit of the tax authority. R. Directive from higher government authority. Subtopic Preliminary Review of Taxpayers File. This is aimed at preparing both the audit department and the audit team that will be involved in the audit exercise for the audit tax ahead. It involves obtaining basic information about the taxpayer, analytical review of taxpayers' performances using ratio analysis, and highlighting risk areas for the audit exercise. This review will also lead to the determination of the appropriate tax audit strategy to be adopted, which include recommendation on the audit approach, number of days or weeks required, level of experience and technical skills required, number and location of officers to be assembled for the field audit exercise. This procedure will be reviewed and approved by the regional or headquarters audit as appropriate. Preliminary activities. Before audit executives set out, certain preliminary activities must take place. These are: A. Gathering of the files and grouping them into the number of audit teams to be established. B. Audit teams to acquaint themselves with background information about their cases. E. Prepare audit checklists to be used in respect of each company to ensure that all necessary areas of audit activities are covered. D. Design interview formats if necessary for company depending on the problems so as to ensure that all grounds are covered. E. Assign specific duties to audit team members. Audit checklist. The complexities of some businesses and/or the need for comprehensiveness make the preparation of audit checklist necessary at the planning stage of a tax audit. The checklist is used during the audit exercise to ensure that a thorough job is done. It also ensures that the exercise is undertaken systematically and not in a haphazard manner. Thus, it makes the audit work to be faster, orderly, and properly completed. The activity items listed in the checklist are ticked off as performed one after the other as the work progresses until the audit is completed. Background information. The following are basic information to be extracted from the taxpayer's file. A. Name of the company. B. Registered address. C. Business address. D. Date of incorporation. E. Date of commencement of business. F. Tax file number. G. Number of business. H. External auditors/tax consultants and their addresses. I. Bankers/addresses. J. Solicitors and secretaries. K. Share capital, authorized and issued. L. Shareholding structure. M. Names of directors/number of shares held. N. Associated companies/addresses. O. Litigation details, if any. P. Period covered during the last audit or investigation exercise. And Q. Accounting year end. Analytical review of tax returns. The officer in charge will use the following records to determine the taxpayers' performances and areas of tax audit focus. A. Last audit or investigation reports, if any. B. Financial statements. We have under the financial statements, we have 1. Chairman/directors/auditors reports. 2. Statements of financial position and statements of comprehensive income. 3. Cash flow statements. And 4. Notes to the accounts. C. Tax returns. From the above, a spreadsheet of balance sheets, profit and loss account, and notes to the accounts of the year to be covered is prepared. Ratios. The relevant ratios out of the following would be computed and interpreted. A. liquidity/solvency. These are ratios designed to measure taxpayers' ability to meet his obligation. 1. We have the current or working capital ratio. 2. Acid test or quick ratio. 3. Working capital turnover. 4. Asset turnover. B. Efficiency or activity. These are ratios that measure effectiveness of taxpayer in using his assets. 1. Account receivable to turnover ratio. 2. Age of account receivable. 3. Inventory turnover. 4. Working capital turnover. 5. Asset turnover. C. Equity position and coverage. These are ratios that measure the balance between the resources provided by the creditors and owners of the company. 1. Debt equity ratio. 2. Debt to total asset ratio. 3. Book value per ordinary share. D. Profitability. These are ratios that measure the ability of the taxpayer to generate an excess over turnover. 1. Profit margin on sales. 2. Return on investment, which is still divided into return on total asset and return on owner's equity. 3. Ratio of tax already assessed to net profit. 4. Ratio of cost of sales to turnover. The tax auditor should bear the following tax evasion tendencies in mind. A. Understatement of income. B. Overstatement of expenses. C. Undervaluation of stocks. D. Creation and maintenance of secret reserves. E. Post-dating sales. What happens to the related cost when income is post-dated? And F. Omission of income. Proper interpretation of these ratios will lead to determination of the risk areas for tax audit focus. Subtopic: Notification of taxpayer. On completion and approval of the preliminary review by the head of the unit, the taxpayer of his tax consultant will be notified of the field audit. On completion and approval of the preliminary review by the head of the unit, the taxpayer or his tax consultant will be notified of the field audit, which will then be carried out in the company's premises. The notification letter will state the following: A. Period or years that the audit exercise will cover. B. List of records or documents to be made available for the audit. The company should be notified that this list is not exhaustive. C. Date and time of commencement of audit exercise. D. Name of the tax officials that will carry out the audit. Members of the audit team are expected to carry their identity cards. The identity cards should only be shown on request by the taxpayers, but should neither be taken away from the auditors nor allowed to be photocopied. Subtopic: Pre-audit meeting followed by field audit. A. The field audit exercise must commence with a preliminary meeting with the management of the company, usually represented by the managing director and/or financial director or their representatives. The company's tax consultants, where necessary, are also expected to be in attendance at this meeting. B. The meeting is aimed at 1. Informing the taxpayer of the purpose of the audit. 2. Confirming background information of the taxpayer earlier obtained in the assessment file. 3. Getting other relevant information that are not available in the file. 4. Familiarization with the company's accounting and operational systems, which include but not limited to the following: whether the company operates manual or computerized accounting system, whether the accounting system is on cash or accrual basis, the invoicing system in place for sale and purchases, whether all cash received are banked intact before expending therefrom. 5. Giving the taxpayer the opportunity to express their views on the audit. 6. Seeking the cooperation of the taxpayer in terms of providing books and records and explanation where necessary. C. The team leader is expected to chair the meeting while a member of the audit team is expected to take minutes of the meeting. D. Part of the function of the team leader is to approve the draft of the minutes and ensure that the final copy is produced and signed on the field by the officer that prepared it, the team leader and the company's representative, as well as the tax consultant where necessary. A copy of the signed minutes must be given to the representatives of parties concerned. Subtopic Post-Audit Meeting. A post-audit meeting should be held immediately after the end of the field audit between the tax auditor and the taxpayer and their representatives at the taxpayer's premises. The purpose of this meeting is to obtain any further outstanding information or documents that may be available only from the taxpayer's management and to answer outstanding questions that arose during the field audit work. Minutes of the meeting should be documented in writing, signed by both parties, and a copy given to both parties. This marks the end of the field audit and departure from the taxpayer's premises. Interim audit report. Preliminary reports. Sometimes the scheduled officer of a case would come across material issues in the course of the preliminary review of the assessment file that should be brought to the notice of the management. In such an instance, a preliminary report would be prepared and sent to the chairman detailing such issues. Interim report. After the field audit, but before the conclusion of the audit exercise, progress reports could be called for by management. The team leader should collate the individual reports of all the team members and write the interim audit report. The report should highlight details of all the findings that may result in additional tax assessment, as well as areas of possible dispute with the taxpayer and suggestions on how to resolve them. The report should be addressed to and reach regional audits or headquarters as appropriate within 1 week of the post-audit meeting. Subtopic Post-Audit Review by Regional or Headquarters Auditors Audit. The regional or headquarters audit will review the interim audit report as soon as it is received by giving clear directives on all reported matters after due consideration of the technical issues involved based on the prevailing tax laws, as well as the generally accepted accounting principles. This will form the basis for the reconciliation meetings. Subtopic Reconciliation Meetings. This is a meeting between the tax auditors with representatives of regional or headquarters audit present as appropriate on the one hand, and the taxpayer and their representatives and tax consultants on the other hand. The purpose of the meeting is to resolve all outstanding issues arising from the field audit exercise with a view to determining the audit tax due and with a view to determining the additional tax due and resolve all disputes in accordance with the tax laws of Nigeria. After the reconciliation meeting, additional assessments may be issued as appropriate with notice, while outstanding matters treated to a logical conclusion. However, in the case of any formal objection by the taxpayer, the reasons for the objection will be considered, and notice of amendment, assessment, or notice of refusal to amend the assessment will be issued as appropriate. Objections by the taxpayer to the additional assessment should be made within reasonable time. Otherwise, the additional assessment becomes final and conclusive. Where notice of refusal to amend is issued, the tax auditor should ensure that due process is strictly adhered to in documentation, record keeping, and correspondences, as this may affect the success of FIR's defense against any appeal filed by the taxpayer before the Tax Appeal Tribunal. It should be noted that all further appeals lie with the High Court, Court of Appeal, and Supreme Court. All that transpired at the reconciliation meeting should be documented in form of minutes, which will be signed and distributed to all parties. Subtopic Final Audit Report. The final audit report. The audit report is very important and should be rendered immediately an audit is completed. It contains all important items about the company and the audit work done. Audit reports tend to expose systems weaknesses, and shoddy audit job is also easily reviewed. The report will state the findings and details of tax liabilities, if any. An audit report should always be completed with the Auditors Recommendations. Such recommendations may include the need for extended audits, special investigation, and even prosecution. Based on the minutes and outcome of the reconciliation meetings, the final audit report will be written by the audit team leader. The report, which should be addressed to the regional or headquarter audits, will state in detail the additional assessments agreed at the reconciliation meeting as well as those disputed. The additional assessments agreed should be separated from those disputed. Both should be analyzed in tabular form under various taxes. For example, CIT, withholding tax, CGT, VAT, payee, etc. for each year of assessment concerned. The report should indicate details of how each additional assessment was arrived at. The regional or headquarter audit will consider the report within a reasonable time of its receipt and issue clear directives for issuance of notice of additional assessment. Amended assessments and notice of refusal to amend assessments as appropriate. The report will also form the basis of FIR's defense in case of an appeal to the Tax Appeal Tribunal, in which case a copy of the report will be sent to the legal advisor for follow-up. Subtopic Types of Audit Exercise. A. Routine sector audit. This audit covers companies operating within a specific industry, for example, banking, construction, oil servicing, shipping. The objective is primarily to ascertain and assess the overall compliance level in the particular industry. B. Routine zonal audit. The tax audit branch is located within the Lagos zone and thus operates more actively within the zone. However, periodic audit tours of other zones are carried out. Companies within such zone, irrespective of industry, are visited and audited. The new dispensation makes the audit unit reside in the tax office that has jurisdiction over the taxpayer's file. C. Special purpose audit. Apart from routine audits, sometimes management would direct the branch to carry out audits to achieve a specified purpose. Such instances include 1. Verification of taxpayers' claim for tax refunds. 2. Disputes between taxpayers and the area office on specific issues. 3. Suspected cases of tax evasion. 4. Value-added tax audits. And 5. Management directives. Subtopic Technical Procedures. Technical procedures refer to the process of carrying out tax audits. It involves planning, organizing, and executing all activities required to effectively carry out the audit. The process could be grouped as follows. A. Allocation of audit cases. All referred cases must be allocated to individual inspectors who would be the schedule officer for each case. The criteria for allocating cases are mainly the level of competence of an inspector considering the urgency attached to the audit, the technicality involved, size of the company, and other relevant factors. B. Pre-audit visit activities. The schedule officer's first task would be to obtain the company's assessment file and sometimes the collection file from the area office for the purpose of extracting relevant financial data. After the extractions, a comprehensive file review will be done and a report written. The report will show the background information of the company, the tax history, relevant performance ratios, and comments on tax queries raised by the area office, areas of potential audit risk, and recommendation as to outcome of the audit. C. Circularization letters. This may be sent to identified third parties for independent confirmation of certain information. D. The field audit. An audit team comprising inspectors and a team leader would visit the company to carry out the field examination of the company's records. The duration of the field work depends on the volume and complexity of the company's operations. E. Reconciliation process. After the field audit, the summary of the audit findings will be sent to the company and its tax consultant for their reaction, and a date is then fixed for reconciliation. The reconciliation involving the review of additional written representation, interviews, and meeting will then begin until after all contentious issues have been resolved. Thereafter, a final letter of intent detailing the revenue's position on the unresolved issues and computation of any additional tax would be sent to the taxpayer. F. Assessment. The relevant notice of additional or revised assessment are raised after the letter of intent has been sent. Also, the withholding tax section would be advised to pursue collection of any withholding tax that may become due as a result of the exercise. G. Objections. Objections to the additional assessments could be raised either immediately after the letter of intent has been received by the taxpayer or after the notice of additional assessment has been raised. In either case, a review of the working papers or whole file would be initiated with a view to ascertaining the validity of the company's objection. Sometimes a revisit would be made to the company to verify any new document available. Having confirmed that the position adopted by the tax audit is right, notice of refusal to amend the assessment would be raised after obtaining the headquarters authority to do so. The case could then be referred to the legal section for litigation. H. The final report. Once all objections, if any, have been disposed of, a final report of the tax audit exercise would be made to the management. The major elements of the report would include the background information of the company, the pre- and post-audit tax adequacy ratio, the audit work performed, major audit findings, tax yield, recommendations, and conclusions. Subtopic Audit Program. This is a schedule of work expected to be performed on each item of the accounts, such as income or turnover, expenditure, assets, and liabilities. Benefits of the audit program. The audit program would be useful in the following areas. A. It will provide details of the work, which the team leader requires individual members of the team to perform. B. It will provide information as to how much of the audit work has been completed as at a particular date and how much is outstanding. C. Provides a record of audit responsibility by providing a record of the audit staff members responsible for each part of the completed work. D. Facilitates audit supervision and control, giving senior members of the audit team information and knowledge regarding the progress of the work done to date. E. Ensures continuity in the audit work. Should there be a change in the personnel constituting the audit team, with new members being able to see at a glance the outstanding work to do, thus providing a basis for planning and staffing the audit team. F. Provides an avenue for the team leader to allocate his available staff in the most productive and efficient manner possible. G. It is a time management tool. The trust of a tax audit will be that of verification of the figures and other information submitted by the taxpayer for tax purposes. The primary purpose of tax audit has been expanded to monitor and maintain the confidence in the integrity of the newly introduced self-assessment system. It helps to improve voluntary compliance by detecting and bringing into account those who do not pay the correct amount of tax. Tax audit is a routine exercise, and the outcome usually leads to reassessment or referral for special investigation if tax evasion is suspected. Subtopic Tax Investigations. Investigations, as distinct from tax audits, are called for when there are problems in, for example, an organization either affecting the whole or particular segment of the organization. Such could be required when a large fraud is suspected or when evidence of mismanagement abound and an interested party requires that the effect on the enterprise be quantified for management decision-making purposes. In an investigation, the scope of work is wider than that of a tax audit. The details of checking and depth of the work will also likely be more than that required for an audit exercise. Tax investigation is similar to any other form of investigation. It is not carried out on routine basis as that of an audit. For example, a statutory audit of the accounts of a company must be carried out every year, whereas investigation may not be carried out in the same company for several years. Tax investigation would be carried out when a taxpayer is suspected to have committed fraud. Suspected cases of tax evasion could lead to investigation. This could be due to failure to file tax returns, filing of incomplete or inaccurate returns, failure to register for tax purposes, etc. Special investigation results from suspicion or actual knowledge of the existence of tax evasion or tax fraud. It is conducted by tax inspectors who have special training and competence in investigation techniques. They can request for assistance of police investigators and enforcers if necessary. The principal aim of investigation is to expose all the circumstances of the fraud or tax evasion and to obtain evidence for possible prosecution. Tax investigators have been given greater power than tax auditors. They can seal up a business premises to facilitate their work and obtain all the documents needed to substantiate the evidence of tax evasion and fraud. Subtopic Stages of Tax Investigation. Actual investigation of tax cases involve the following stages. A. Surveillance or pre-investigation activities. This involves checking and cross-checking, obtaining more information on the alleged tax fraud. It involves discrete analysis of data, reports, and complaints. These have to be done speedily, or the offense could become compounded. B. Evidential audits or investigation. At this stage, the investigators move into the business premises of the suspected party to conduct in-depth tax audit, tax charge of any evidence discovered, secure a warrant of arrest, and have the suspects arrested if necessary. At this stage, any individual may be invited for investigation. Also, thorough searches of individuals, offices, and apartments may be conducted to obtain relevant evidence that might be useful in prosecuting the case. C. Case preparation. This involves the collation of evidence, the interrogation of suspects, and careful examination and analysis of seized documents to assess their relevance to the case and potency in the law courts. At this stage, the case can still be dropped if the evidence is weak. D. Arraignments. This is the stage where the case goes to court for criminal prosecution. All the evidence collected and witnesses secured are made available to the prosecutor who is thoroughly briefed on the case. E. Termination of investigation. Investigation in a case of criminal tax fraud or tax evasion can be terminated at any stage if the following conditions obtain. 1. Insufficient evidence. 2. Criminality is not involved. Maybe what happened was tax avoidance and not tax evasion or fraud. 3. There can be termination by law where continuation can no longer be sustained under the provision of the law. An example is where such a case becomes statute barred. 4. If the suspect dies or becomes medically or legally insane. Subtopic Investigation/Intelligence Division. The Investigation/Intelligence Division of the Federal Inland Revenue Service is in charge of all investigations and intelligence activities of inland revenue. The roles and responsibilities of the head of the division are as follows. A. Articulate and direct policies and programs aimed at achieving the objectives of the division. B. Define key operating or guiding principles. C. Design strategies for deterring violation of laws, hence ensuring tax compliance. D. Set up procedures for case referrals from tax offices. E. Set up proactive processes and define parameters for identifying potential cases of violation. F. Address emerging areas of fraud, for example, e-commerce, fraudulent financial reporting. G. Collate and maintain reliable statistics of investigation or intelligence work. H. Coordinate the activities of all the units in the division. I. Develop and implement appropriate training program for field officers on how to conduct investigation or intelligence work, preparing a case for court, computer search for evidence gathering and data recovery, etc. J. Partner with other experienced tax jurisdictions in the area of information sharing, latest developments in taxation, including emerging areas of tax fraud, computer searches, and data recovery. K. Liaise with the various regulatory agencies on issues of tax violations. L. Provide law enforcement agencies with information sufficient to prosecute violators. M. Provide management with an update of cases prosecuted. N. Develop and maintain a system of records to track and report on cases, their progress and results. O. Recommend amendments to tax laws in order to plug all areas of tax leakages. And P. Budget and plan for financial, material, and human resource requirements of the division. Subtopic: Civil Investigation Unit. The activities of this unit revolve around the following. A. Investigate tax avoidance scheme. Examples are 1. Artificial transaction. Section 18 of CETA, that is, any transaction carried out primarily to obtain tax benefits, which means reduction or avoidance or deferral of tax or increase in refund of tax, etc. 2. Creating an offshore company for purposes of reducing tax payable. For example, instead of having the Nigerian company buy direct from a foreign supplier, a related offshore company is set up in a tax haven country to do this and will in turn sell the products at a higher amount to the Nigerian company, thereby diverting profits offshore. Another example would be when a profitable division is moved offshore. The key is to determine if, in fact, it is operating offshore. 3. Treaty shopping. This involves shopping for the best tax rates offered by treaty countries and then carry out transactions in such a manner to take advantage of those tax rates. 4. Back-to-back loans to avoid withholding tax. 5. Alleged purchase of foreign assets at inflated amounts, which results in excess capital allowance claim. 6. The use of tax havens and its detrimental impact on the tax system could be significant, both in terms of revenue and compliance. 7. Income splitting arrangements. B. Investigate cases for tax refunds. C. Review cases for mergers and acquisitions. D. Issue warrants for search and seizure under Section 45A. E. Refer cases to Criminal Investigations Unit where there are indications of deliberate intention to evade tax or commit fraud, etc. F. Identify area for amendments to tax laws in order to plug all areas of tax leakages. Subtopic: Criminal Investigation Unit. The Criminal Investigation Unit is responsible to A. Investigate, penalize, and recommend prosecutions in case of tax evasion. With tax evasion, you have fraud with mens rea, that is spelled as MENSREA. The amounts are clearly taxable, that is suppression of income, fictitious expenses, and does not require an amendment to the tax law. Evasion transactions are done knowing that it was unlawful to do. Normally, criminal charges are laid which could result in fines and/or jail terms in addition to the tax and penalties. Examples are arrangements premeditated to reduce tax payable, understatement or non-disclosure of income, overstatement of expenses, creation of fictitious assets and expenses, disproportionate share of expenses and income between offshore and onshore entities, the use of artificial transactions, complex management structure and associated entities that would result in tax evasion, non-filing of tax returns or filing of incorrect returns, and denial of Federal Inland Revenue Service access to records. B. Investigate and liaise with relevant agencies for prosecution in cases of 1. Fraudulent diversion of Federal Inland Revenue Service taxes such as withholding tax, value-added tax, etc. 2. Fraudulent payment of income tax and other taxes through use of falsified withholding tax receipts. 3. Abuses by companies and government agencies in value-added tax or withholding tax deduction and remittance. And 4. Fraudulent procurement of tax clearance certificates, revenue receipts, withholding tax credit notes. C. Carry out search and seizure where such would result in obtaining relevant documents for an investigation. D. Analyze and evaluate evidence obtained to establish criminal violations. Follow up with assessments, penalties, and prepare case for prosecution. E. Identify the areas for amendments to tax laws in order to plug all tax leakages. F. Assist in preparing evidence for prosecution of violators. G. Liaise with the National Drug Law Enforcement Agency (NDLEA), Economic and Financial Crimes Commission (EFCC), Nigeria Deposit Insurance Corporation (NDIC), and Central Bank of Nigeria (CBN) to investigate violation of tax laws in case of white-collar crimes such as money laundering. Subtopic Intelligence Unit. The main function of this unit will be to gather and analyze information and thus maintain a database of information for criminal or civil investigation and the Federal Inland Revenue Service in general. Specifically, the unit will A. Liaise with tax office to obtain information on returns filed, stop taxpayers, late taxpayers, etc. for database. B. Liaise on a regular basis with banks and the Corporate Affairs Commission to obtain information on new accounts. That's section 44. New companies, that is non-filers. E. Liaise with ministries or government parastatals on contracts for current and prior years for cross-checking the returns filed by the companies. D. Gather and review information in newspapers, magazines, journals, radio, and television for signs of potential civil or criminal violations. E. Use intelligence techniques, for example, surveillance techniques and computer database searches, to gather information on a company's businesses, financial activities, etc. F. Carry out special enforcement programs on suspected targets. G. General intelligence collection. H. Refer cases to the Civil or Criminal Investigation Unit after carrying out relevant analysis. I. Obtain information from third parties. And J. Obtain and review published financial statements of offshore companies. Subtopic Assessment of Investigation or Intelligence Division. The perceived strengths and weaknesses of the Investigation or Intelligence Division are a strength. 1. Top management support. 2. Quality staffing with inspectors of high integrity and professional competence, preferably chartered accountants, economists, and lawyers. 3. Enforcement powers in the tax laws, such as power to seal up company premises, to issue warrants after due consultation with the management in the case of resistance, and 4. FIRS legal units continued assistance in the prosecution of tax offenders and advising on legal issues. B. Weaknesses. 1. Internal and external interference. 2. Obstruction of investigation through abuse of the judicial process. 3. Conflict between tax audit section in tax office and civil investigation unit. 4. Delays through lack of cooperation from taxpayers in the provision of necessary documents and records. 5. Inadequate funding due to budgetary constraints. 6. Inadequate experience in criminal investigation. 7. Reliance on external bodies such as the Nigerian Police, Economic and Financial Crimes Commission, etc. 8. Inadequate infrastructure, computers and equipment to perform necessary duties, and unstable power supply. Chapter Review. This chapter defines tax audit and investigation and explains its objectives. It also describes the two types of tax audits and explains the process of carrying out a tax audit, especially under the pre-self-assessment period and under the current self-assessment regime. There is explanation on preliminary matters to be addressed before an audit is commenced, what to do during an audit, and what needs to be done in concluding an audit, both in the Taxpayers Office and in the Tax Auditor's Office. This includes the preparation of the audit checklist, preliminary meeting between the taxpayers' representatives and the tax auditors, analytical review of tax returns, post-audit meeting, and final audit report, as well as raising of additional assessments, if any, to conclude a tax audit. However, in the case of tax investigation, an intelligence unit of the tax authority is involved in sourcing for tax information as regards incomes from all sources received by or paid to a named taxpayer. Worked examples. Questions. 1. DYO Nigeria PLC is a manufacturer of home appliances. The company has been operating as an indigenous business for the past 15 years. The company has branches in the 6 geopolitical zones of Nigeria and is still planning to expand its business beyond Nigerian shores. The operating efficiency of the company appears sufficiently sound and would be able to overcome any competitive activity. The company is quoted on the stock exchange, hence it is easily seen how positive its share trend has been. The company has efficient staffing policy, hence the staff members are professional in their individual areas of discipline. In the last 3 years, the tax office has been having a running battle on the tax returns under self-assessment system being forwarded to the tax authorities. In the last 2 years, tax office insisted that the company be assessed on best of judgment. This decision did not go down well with the managing director of the company. Series of meetings were held between the company and the tax authority, but without any success. With the breakdown of communication between the two parties, the tax office wrote to the company that a team of tax investigators were on their way to the company and that they be given free access to the company's tax-related matters. The managing director now feels that he would not like to involve any party in the problem existing on tax matters, and that he would like to know if tax auditors should be involved instead of investigators. Required as a consultant to the company, explain the following. A. 1. Tax audit. 2. Checklist in tax audit. 3. Tax audit reports. 4. Compare tax investigators with tax auditors. B. Discuss the stages involved in tax investigation. C. What can lead to the termination of a tax investigation? Question 2. As a consequence of the cash flow problem experienced by most state governments in Nigeria, most of them have secured the services of tax consultants to carry out back duty and tax investigations. This has increased the returns into the coffers of the various state governments, just as it has necessitated filing of notice of appeal and appearances before the Tax Appeal Tribunal. Required, explain the following. A. Back duty and tax investigation. B. Investigatory power. C. Search and seizure. D. Appeals. E. Notice of appeals. F. Hearing of appeal. G. Appeal against the decision of Tax Appeal Tribunal. H. When an assessment is final and conclusive. 3. Question 3. List the stages in a typical tax audit process. Question 4. Tax audit is conducted for the purpose of ensuring that a taxpayer has conducted his affairs in accordance with the tax laws and practices. Required. Explain the following regarding the tax audit of the revenue. A. Objectives of a tax audit. B. Selection of taxpayers for audit. Suggested solutions. Solution to question 1. A1. Tax audit. Tax audit is the examination carried out by tax officials on the accounting books, records, documents, and tax return files by a company with a view to determining the level of compliance with the provision of the tax laws. 2. Tax audit checklist. This is the comprehensive list of the documents and information required in carrying on the audit. It ensures that the exercise is carried out in a systematic manner. 3. Tax audit report. This is the report issued by the tax officials on the audit exercise carried out on a company. The report should state the period covered by the audit, the scope of work done, findings, and the additional tax liability established. 4. Tax investigation or tax auditors. 4. Tax investigators or tax auditors. Tax investigation aims to unearth fraud no matter how long and to secure evidential materials for possible prosecution of tax evasion or tax fraud in the law court. Investigators have a greater authority than the tax auditor because they can seal up a business premises in order to facilitate their work and obtain all the documents needed to substantiate the existence of tax evasion and fraud. 1b. Stages of tax investigation. 1. Surveillance or pre-investigation activities. This involves checking and cross-checking of information and documentation on the purported tax fraud. It involves discrete analysis of data, reports, and complaints. 2. Evidential audit or investigation. At this stage, investigators move into the business premises of the accused party, conduct in-depth tax audits, take charge of any available evidential materials, secure a warrant of arrest if necessary, and lock up the suspect. At this stage, an individual can be invited for interrogation. 3. Case preparation. This involves the collection of witnesses, the interrogation of suspects, and a careful examination and analysis of seized documents. At this stage, the case can be stopped if the evidence is weak. 4. Arraignments. At this stage, it means that the case has gone to the court for criminal prosecution. Therefore, the court's process will start until the case is concluded and judgment passed. C. Termination of investigation. An investigation of a criminal tax fraud or tax evasion can be terminated at any stage based on the following conditions. 1. Insufficient evidence. 2. Criminality is not involved. This may be where tax avoidance is mistaken for tax evasion. And 3. If the suspect dies or becomes medically or legally insane. Solution to question 2. Back duty assessment will arise on a tax audit exercise where the relevant tax authority has reviewed the underlying records of a taxpayer to confirm that the records agree with the returns that was earlier on filed. Any difference observed between the original returns and the underlying records form the basis of an additional assessment. Such additional assessment may become the subject of the objection and appeal procedures. Meanwhile, such back duty work is limited to 6 years before the year of the audit. On the other hand, an investigation is a more rigorous exercise which has no limit for the examination. Here, it may be triggered by some criminal activities such as outright evasion of tax. It will usually involve the use of law enforcement agents, and the offenders may be charged to court for criminal activities. B. Investigatory power. 1. The service shall employ special purpose tax officer to assist any relevant law enforcement agency in the investigation of any offense under the tax law. 2. The service shall have the power to investigate or cause investigation to be concluded to ascertain any violation of any tax law, whether or not such violation has been reported to the service. 3. In conducting any investigation under B above, the service may cause investigation to be conducted into the properties of any taxpayer of any taxable person, if it appears to the service that the lifestyle of the person and extent of the properties are not justified by the source of income. 4. Where any investigation reveals that the commission of any offense or an attempt to commit any offense, the service shall undertake the prosecution of the offense. C. Search and seizure. Where the tax authority has a reasonable ground to suspect that an offense involving any form of total or partial non-disclosure of information or any irregularity or offense in connection with tax has been committed or can be found on the premises, registered office or any other office or place of management of the taxpayer, or in his residence or the residence of its principal officers, agents, or representatives, the tax authority may authorize any of its officers to enter, if necessary by force, such locations at any time from the date of such authorization and conduct a search. The authority to enter and search must be made in the prescribed form in the 6th schedule of the Act. Upon entering the premises, the officer may seize and remove anything whatsoever found therein, which he has reasonable cause to believe may be required for the purpose of arriving at a fair and correct tax chargeable on the taxpayer, or as evidence for the purpose of proceedings in respect of such an offense. An officer authorized to carry out any such search and seizure may execute any warrant by calling to his assistant any police officer, and it shall be the duty of the police officer to aid and assist him. D. Appeals. A taxpayer may appeal against the decision of either the tax authority or the court where it is not satisfied. Such appeals must be lodged in writing and not later than 30 days after the receipt of the notice of refusal to amend or the receipt of the judgment of the court. E. Notices of appeal. The notices of appeal must be written, contain the grounds of appeal, and must be lodged not later than 30 days after the receipt of the notice of refusal to amend or judgment of the court. The notice of appeal must contain certain basic information such as the name of the taxpayer, the tax file number, the relevant year of assessment, the amount of taxable profit, the amount of assessment, the date the notice of refusal to amend or judgment of the court was received, and the ground of appeal. F. Hearing of appeal. The hearing of appeal before the Tax Appeal Tribunal is usually made in public. Sometimes the hearing will involve the taxpayer and the tax authority being represented to make their case. Each part is allowed the use of its auditors, tax consultants, and legal advisors. The decision of the Tax Appeal Tribunal is usually under the hands of the chairman. G. Appeal against the decision of the Tax Appeal Tribunal. Once the Appeal Commissioner have delivered their judgment, an appeal may be lodged to the High Court within 30 days of the receipt of the judgment. The appeal must be written and must show the grounds upon which the appeal is being made. H. When an assessment is final and conclusive. An assessment becomes final and conclusive when no valid objection or appeal has been lodged within the time limit. It is also applicable where an assessment has made or agreed to, revised, or determined on appeal has not been the subject of a further appeal within the time allowed. Solution to question 3. Stages in tax audit process include: A. Selection of the taxpayer to be audited. B. Preliminary review of the taxpayer's file. C. Notification of the taxpayer. D. Pre-audit meeting. E. Field work. F. Post-audit meeting. G. Interim audit report. H. Post-audit review by regional or headquarters audit unit. I. Reconciliation meeting. And G. Final audit report. Solution to question 4A. The objective of a tax audit are to enable the tax auditors determine whether or not 1. Adequate accounting books and records exist for the purpose of determining the taxable profit or loss of the taxpayer and consequently the tax payable. 2. The tax computations submitted to the tax authority by the taxpayer agree with the underlying records. And 3. All applicable tax legislations have been complied with. 4. Provision of an avenue to educate taxpayers on various provisions of the tax law. 5. Discourage tax evasion. 6. Detect and correct accounting and/or arithmetic errors in tax returns. 7. Provide feedback to the management in various provisions of the law and recommend possible changes. 8. Identify cases involving tax fraud and recommend them for investigation. 9. Forestall taxable persons' failure to render tax returns. 10. Forestall taxable persons rendering incomplete or inaccurate returns. And 11. To encourage voluntary compliance, which is one of the strong reasons in support of a self-assessment scheme. Tax audit is usually conducted by a group of experienced support staff of the revenue. Solution to 4B. The guidelines and criteria for the selection of files for audits are to be determined by the audit headquarters. The selection of cases for audits is a management function. The criteria which would vary from one type of business to the other include, but are not limited to, the following. 1. Self-assessment taxpayers, at least 2 years since the last audit of the taxpayer. 2. Taxpayers with refund claims, especially arising from excess withholding tax credit and or other named reasons. 3. Taxpayers with nil returns or continuous loss situation. 4. Taxpayers with very low adequacy ratios. 5. Based on routine industry checks or sectorial audits, that is project audit. 6. Based on lead information received from intelligence or other FIRS departments or external sources. 7. Transfer pricing arrangements. 8. Tax planning schemes. 9. Claims under double taxation agreements, that is DTA. 10. Secondary files. Relationship with another taxpayer by way of holding, subsidiary, associated or related companies could be criteria for selecting companies for audit. 11. Industrial groups compliance evaluation and profitability comparison. 12. Verification of poor or extraordinary performance. 13. Referrals resulting from desk examination. 14. Information resulting from examination, audit, and investigation of other taxpayers. 15. Random sampling. 16. Firms making unusual requests or taking extraordinary decisions such as centralizing an erstwhile decentralized operation. 17. Information from intelligence unit of the tax authority. 18. Directive from higher government authority. End of chapter 4. Thank you.